Your pension fund is supposed to be the most boring, bulletproof investment on earth. It's the money you literally cannot afford to lose. But right now, the managers of your retirement are quietly loading up on trillions of dollars of high-risk, illiquid debt. Debt from companies that traditional banks flat out refuse to touch. How does junk debt end up in a heavily regulated retirement account? Through a $1.7 trillion Wall Street loophole that turns financial garbage into investment-grade gold. Welcome to the private credit bubble. To understand the why, you have to understand the desperation. Global pension funds and life insurers have massive payouts to make every month. But for years, safe government bonds simply haven't paid enough to cover the bills. They needed higher yields, fast. Shadow banks stepped in to lend money to mid-sized companies at sky-high interest rates. But this debt is highly illiquid. You can't just sell it on an open exchange. Wall Street had a problem. How do they cash out? They needed a buyer with deep pockets, like your pension fund. But pensions are legally barred from buying junk. So Wall Street built a laundromat. They take hundreds of these risky, illiquid loans and smash them together into a complex structure called a Collateralized Fund Obligation, or CFO. Because they are bundled together, rating agencies look at this pile of risky debt and magically stamp the top layer as A-rated or investment grade. It's the exact same financial alchemy we saw with mortgages in 2008, just with a new acronym. The debt is washed, and the pension funds are legally allowed to buy it. And here is the dark reality. The consistent high returns your pension fund is reporting right now, it's largely an accounting fiction. Because this private debt doesn't trade on an open market, the funds get to decide what it's worth on paper. It looks like a massive success as long as no one asks for their cash. But what happens when the music stops? When middle market companies start defaulting on these loans because interest rates are too high? The underlying collateral inside that shiny CFO will be revealed as exactly what it is: worthless. This doesn't mean your pension evaporates overnight, but it does mean a severe liquidity crisis is brewing. If the shadow banks take a hit, the shockwave hits the mainstream anchor, retirement funds, which means frozen payouts, slashed benefits, or massive taxpayer bailouts. Wall Street found their exit liquidity, and it might be your retirement. If you want to know how to protect your portfolio from this hidden system, hit subscribe and check out next video.